The types of expenses that they want these ITCs paid back to them are road vehicles under 3,000 kilograms. So I can paraphrase that as cars. Energy costs. I mentioned earlier the light and heat for this building. Those are the types of energy costs that they're referring to, and not the motor fuel that you put in your car, because there's a point of sale rebate on that. Telecommunication costs. Meals, beverages, and entertainment. I put that in bold because as a supplier of that, your business clientele may be subjected to this restricted ITC. So they're going to be paying more tax on a meal on July 1st and not able to claim back any of that 7% component to the extent they're a large business. Allowances and reimbursements are affected as well. It's not just reimbursement, but allowances are included in this as well. There are a number of exclusions from these cost structures. We'll get into a little bit more detail as the slide will move on. So here's your 3,000 kilogram car. It excludes trailers, semi-trailers, etc. The parts are also under the same thing. So you have a 3,000 kilogram car and you get it fixed. The parts you pay HST on, no ITC on that. If you were in Ontario and filled up your vehicle with fuel, you would not get an ITC, but in British Columbia there's a point of sale rebate. So you're not paying HST, so there is no restriction on the ITC. Your gas, fuel, and steam, the specified energy, includes electricity acquired by a lessor from a lessee, and for the purchase being supplied to a lessee. The lessor can't claim the provincial components. Also includes energy used in the construction of real property. If I get into where the exclusions are, you'll see where that distinction is. You can claim an ITC if you're a manufacturer and using energy. So I have a plant here and I'm building something, I'm going to use a lot of energy, I'm going to use a lot of electricity and power and other sorts of energy costs, but because I'm building something to resell it, I can claim some of that back. I don't have to recapture it all. Same thing with the production equipment being used to use that. It does not, this exception or this ability to claim back some of this input tax credit does not include anyone who's considered to be a manufacturer at a retail establishment. So if I'm making homemade ice cream and causing increased energy costs, because it's a retail establishment, I'm not going to be able to claim any form of ITC. If I'm a massive ice cream manufacturer off plant that supplies wholesale, I will be able to get an ITC on this 7% component. And this notice that the BC government has released said instead of calculating it directly, I can take an estimate of 87%. So to cover that off, I'm an ice cream manufacturer. I sell my goods wholesale to grocery stores and to restaurants. I claim all of my 5% GST back like I always do. The 7% HST I pay on my energy costs, I'm able to claim 87% of that back. Very soft. Some of them have a telecommunication service provider that has one bundled bill that has everything in it, and TELUS or Rogers or whoever it is going to charge you HST on this. How much can you claim back? You have to figure out how much is for internet. So if you're a hotel and you have wireless or wired internet, how much is that you're paying? How much is it for web hosting? And if you have a toll-free number, you get the ITC on that component. Other clients I've been to have it all itemized. So the supplier has got, this is your internet bill, this is your toll-free bill, this is your landline and long-distance charges. You just restrict your ability to claim input tax credits on the landline and get full ITCs on the other. So those bundled packages, there are proxies you can use. So in BC, you can take that lump sum bundled bill and claim, so if it's $112, because that's got the 5% and the 7% in it, you can take 5% of that 112 and claim that back, plus the $5 GST. Meals and entertainment that are subject to the current 50% restriction. So working for an accounting firm, and I had my supper last night. When I filed my expense claim, my employer is only going to be able to claim 50% of the GST back that I paid last night. if I come back in July and I pay 12% HST, I'll get my 50% of the GST, but I won't get any of the 7% HST component. That's totally restricted. Of course, we have exceptions. And the big one I came across was an Alberta client who their contracts require that they itemize out their meal costs. So their employees are traveling to and from places. They're actually billed for their hours, and then they're required to bill for their meals. If you itemize it out, you get a full input tax credit for GST. Currently, it's the end person that has a 50%. Same thing on HST, you get the full 7% back, and it's that person you invoice that is subject to the restricted input tax credit. And the other two are just your simple, well, not simple, but your standard income tax rules that have existed for a number of years. The way the government wants us to report this stuff is to claim back all of our input tax credits on these costs in the one box, and then there's going to be a BC RITC box where we add back the amounts that were restricted to claim, and we put that in that box. An ironic thing when we read this is if you pay GST now for your business, you have up to 4 years to claim it back. You don't have to claim it back in that particular return period that you bought it in. But these recaptured amounts have to be reported in the particular period that you paid it in. And so it kind of took away the 4-year rule, at least for the provincial component. That said, what they have come out with instead is, if you know, say meals, entertainment, some of you are, you're an administrator, you're allowed to claim everything on the GST side, 100%, and then at year end you do an add back at 50% when you've done your income tax return. There's an income tax deduction add back. You do your ITC at the same time. So if you're doing that approach and you're not quite sure what you're doing on a return by return basis, you can take an estimate. So, okay, last year I know my meals entertainment were this amount. I'm going to do my add back on an estimated amount on for this restricted input tax credit, and then at year end I can do a reconciliation. So the sale of goods, the rules that currently exist in the Atlantic provinces are the same. If I deliver that computer to Halifax, I'm going to charge HST. And case in point, just to add another complexity, Nova Scotia increased their HST rate to 15% on July 1st. So you're going to have 4 different HST rates in Canada. Yeah, just another example of air conditioning units. So you might have a master contract with one client with a number of locations. You're taxing based on where those goods are delivered. Services, the type is important. There's a general rule, and there's override rules with respect to services that's in relation to real property and in relation to tangible goods. But we're looking at where the person's business is and not necessarily where the supply occurs. Self-assessment for you that claim full ITCs on your goods now, there is no self-assessment required. The only time that you might have that is, and I put in brackets, they're not eligible for an ITC. So if you bought a 3,000 kilogram vehicle in Calgary and brought it into BC, you would have to self-assess that 7% component because you're not able to claim it back. But if you bought restaurant equipment in Calgary and brought it here to Kelowna, there's no self-assessment because you'd be able to claim it back. So that's kind of try to get in your brain. Can I claim back? Yes, I don't have to self-assess. If I'm restricted, then self-assessment is required. So going forward, budgets and cash flow, again, just remembering if you've got a major capital expense planned on the horizon, the GST at 5% was somewhat immaterial, but at 12% it can impact your cash flow, so you might want to strategize, invoice me near the end of the month and I can claim it before I actually have to pay you. So if I can claim, if you give me this 30-day payable, I can claim this thing by, if this is July 25th, bill me then. I'm going to claim it on my July return, so hopefully I get my refund before the end of August when I have to pay, those kind of things, if it becomes an impact. Your accounting systems, your sales purchasing systems, that is your biggest challenge ahead of you. And I talked about the hotel tax versus the HST and how you might want to check your client out, do up an invoice for June 30th. You don't have to actually have them pay it that day, but give them 2 invoices when they check out, one to June 30th night and then from then on, so that your systems are able to accommodate that. documentation, invoices, contracts, receipts, all that stuff. You have to go in and change the GST moniker to an HST or GST/HST moniker, get rid of all the PSTs on your invoices, all those other really good things.